Let's go. In my last video, I introduced the Edge Finder to you guys. In this video, we're actually going to be using it. So this morning, I ran across the major pairs and also the minor pairs in the market. And the Edge Finder really singled out 4 particular pairs for us to look out for this time. We have 3 bullish and 1 bearish pair. And stick along, you'll see what is common among all of them and how they can use them to derive other things. If this is the first time you are hearing of the Edge Finder, I'll tell you to watch the previous video, but then again, I'll still give you a very short explainer. The Edge Finder is a web-based tool that tracks the fundamental, the technical, and the sentiment of traders and gives you an analysis to give you a directional bias. Basically, it's a tool that does a lot of fundamental calculation for you and then pairs it up looking at sentiment as well as tying it in relations to what is happening on the technical chart, especially the 4 hours and daily, and then gives you a directional bias. So it's a very small tool that does a whole lot, and it is owned by a guy called Nick Sayak, or rather a company, his company called A1trading.com. Now, I'm not promoting the tool for anybody. I am not sponsored to promote the tool anywhere, but I'm simply saying I have found something that really makes sense. Without further ado, the very first pair I'm going to start with is one of the major, the US dollar against the Japanese yen. Now, taking a look at the entire situation here, we have the economic data, which is the economic growth, the job markets, inflation markets, all together. They are all in the bullish side. They are all saying bullish based on the information released last around this particular sessions of the markets, or that particular session of the economic data. Putting that into account, you also look at the sentiment bias, the crowd bias, which is the retail traders. The retail sentiment is bullish, as well as the crowd bias being bearish. So sentiment, it has a 1 score. It's something that you should be looking to go in the right direction. The COT data last release clearly says the changes is more in favor of the dollar than the Japanese yen. And then the technical signal, right? Technical chart. The technical chart has a 4 hours/daily trend, which is bullish. Like I said, it's a 4 hours/daily trend monitor. And the seasonality in the last 10 years, right? The most happening in the last 10 years is a bullish season. So we are currently in the bullish season. All of this clearly states the US dollar against the Japanese yen is something you should be looking to buy. So right here we have the US dollar Japanese yen. Now, I'm only going to be able to interpret this chart based on my own trading strategy. And as you all know, I have 2 strategies I'm only trading currently. I have the break of structure, basically break of supply or demand, or break and retest. So I have the break and retest strategy, and then I have the QMRO QMZ, which is the Quasimodo reversal and Quasimodo continuations. Now, how do I see this chart personally from my own strategy? This lines you see here are just the 20 and 50 SMAs, as well as a zigzag indicator, all construed into one. It's a script I have for myself. It's the only indicator I use going forward. Now, on the daily, I have price break above this level, which is, I'm seeing a very good support level right here. However, right here we can see that price seems to have met with my expectation already. It has come in and it's most likely already bouncing off. So on the 4 hours, what does that look like to me? So on the 4 hours, the only way I see this trade happening is from this level right here. This is a key support level right now, and price is also trying to walk through these levels too. So I think a fair retest to these areas is something that is worth buying. However, this is something I am personally careful of being. I'm not going to be able to take any trade here. Why? Well, if you look at it, right, if you look at this particular level where price is currently at 160, at the 160 mark, right, around 160. Different brokers may have close to 161 or just close above 159. But one thing is certain, if you go to the monthly view, you realize that price has been here before. And it seems like price found it very difficult to move above this zone. So on the monthly, this is a zone where it's going to be difficult to push price through. Unlike levels like this, you can see levels like this, you see how price ran through it. So if I was seeing something like this, or I see something like this happening, I'm going to be confident that the price can actually push up even further on the monthly. Why am I scared of this? Well, we have seen in recent times that BOJ doesn't like the dollar at 160 basically. They don't like the dollar at 160 to a Japanese yen. So what does this mean for me personally? It means this zone is a buy with caution zone. So if I'm going to be buying in this zone, I'm going to be buying with extreme caution. And when I say extreme caution, I'm not going to be looking for anything below the 1 hour. I'm not even going to be looking at the 1 hour in the first place, because to me, the 1 hour trade, the only opportunity I have here is a QM trade right here. I can clearly see it using the structure. You can see this is it, the QM However, this is not valid to me. Why? Because I don't have a clear zone leading to this. I don't have any clear zone leading to that. So it's not so valid in my opinion, though it's something you can still try if price comes down here, depending on what the economic data is saying at that point in time. So moving on to the next major pair in the markets, we have the New Zealand dollar against the US dollar. This is extremely bearish according to the hedge finder. And why is it bearish? Well, it says the economic growth data is very bearish, the job market data is bearish, as well as the inflation data. But the inflation data is bullish, right? It is slightly bullish in my opinion, because it's just a 0.1. You can see how it's staying just one click away, so it's slightly bullish. Apart from that, the technical charts on the 4 hours and daily is a bearish trend. The month seasonality is bearish. The COT data, both bearish in terms of net positioning and the weekly change, as well as the sentiment. The retail traders are bearish, the crowd is bullish on it. So let's pull out the New Zealand dollar against the US dollar on the chart. So this is the New Zealand dollar against the US dollar. I'm just going to switch up to the daily. Now, what am I aiming for in this chart? It's very simple. I'm aiming for things like this. So on the daily, I have my last obvious zone here. I have a last zone here. This is the last area where I had good zone. This is where I'll call a resistance zone for me. Though I'm currently seeing price at a formal demand zone, or rather a formal support zone, formal support area. So personally, I would like if price breaks through this level first before it comes back to retest. I would personally prefer to see something like this happen, so that then I can be more confident. Not that I'll just confidently sell anyhow, right? I'll be confident to sell towards the downside. I would really hope something like that happens, but we can't tell, right? Why do I hope for something like this? Well, this is a zone where anything can happen. Anything can happen. So let's go into the 4 hours and see where was the last or recent place. You can see how this zone was having clear resistance, or rather clear support for price in the past. This zone was a clear support zone. You can see right here, price went up. Right here again, price went up. Right here again, price still managed to push off a little bit till it broke through. So zones like this, when price does whatever it's doing and comes back, it will most likely fall again at least once. Maybe not for a long run, maybe for a short run, but at least it's going to fall at least once. So on the 4 hours, I'll say I still have that same neat zone to look out for. On the 1 hour, on the other hand, on the 1 hour, I'm seeing the possibility for price to do something like this before it moves. But whatever it does, I still prefer that same daily target of price pulling down first before coming back up. I still prefer that move. Now we've discussed the two major pairs, one bullish, one bearish. So what are the other two pairs in the markets that the hedge finder says really has like good strength? So firstly, we have the British pound against the New Zealand dollar, and this market has absolutely bullish data for it. The economic data, the job data, the inflation are all on the bullish side. The sentiment, institutional activity, as well as the technical chart are all bullish. Let's see how that looks like on the chart. Okay, so this is the New Zealand dollar against the British pound, and one thing you'd see here is they are still quite far from the last zone, last area where it was the last area of, should I say, resistance? Yeah, the last area of resistance, basically a supply zone. They are still far from it, though we can see price is pushing off a clear area of support. You can see, we could see price is pushing out of a clear area of support around here. So this is an area of support where price has come to medicate, and price is really respecting this support area. As you can see, when price came down here before, we had some bounce and price went off. Now, what do I expect? What am I looking out for? Well, personally, I won't be able to trade these markets. Just looking at the daily, it's obvious the price is it's looking to just go upwards. But if price doesn't do this and price makes like a pullback and then pulls off a high, that would be a good one. That would be a good one. But I don't see clear levels on the daily for price to even pull back to, which I would say is a good daily level for me. However, when you go down lower to the 4 hours time frame, we can then start to see clear, plenty of clear zones where we can get price to at least retrace to for us to jump into. So we can see this one right here, which price has already even retraced to at this point. Let me just zoom in. You can see price already retraced into it, but it doesn't mean price is going to keep running up all of a sudden, right? Price could still come down a little bit before moving up. The only way I can see that is on the 1 hour chart, right? So if I see price to this on the 1 hour, then it's something I could buy into. But apart from that, I don't see how I can trade this market. It's already left me. So the last market is the British pound Swiss franc, the British pound against the Swiss franc. And what we have here is a very similar reading. Everything here is bullish. So let's take a good look at what it is on the chart. So on the British pound against the Swiss franc, we have, actually I think this one has a better view, right? Has a better view. We have a clear previous zone here. This is a clear zone where we expect price to come back, which price already did a comeback here, as you can see, on the 23rd of March. So what are we hoping for price to do next? Well, I can see a zone here, a supply zone, which I expect and I pray, similar with the New Zealand dollar against the US dollar, I pray price rips through it before it comes down for a retest, and then I can start to hope for a buy if the fundamental analysis is still in line for a reason to buy. That's, to me, is the best thing I can do. Moving on to something else, I want to show you guys something else. QMR, QMC, right? I'm seeing a good possible QMR here. I can see this movement of price already. I can see this one, so I can see a good possible QMR. But however, I doubt this is going to hold, right? Because if you zoom out on the British pound Swiss franc of recent, you realize that it's more of a falling knife than it is a rising horse. That's basically what it is. On the weekly, we have very similar scenario. We could have probably some push-ups to around the 1.08 or the 1.09 or 1.1, even still. That is like giving it extreme grace, but I doubt seeing it cross the 1.4 level. I kind of doubt it. I'm not saying it's not possible, but I completely doubt it right now, that we may have price breaking past the 1.4, 1.14, 1.15 levels. But price making it towards the 1.08 and the 1.1 levels, that has some possibilities. So we've looked at all 4 pairs the Edge Finder has literally pushed out as the best things you should look out for. However, it would be greedy of me not to show you guys everything. Also, another thing you should take note of is the fact that apart from these pairs, there are 26 pairs in the market, minor and major, not the exotic and the rest, but there are 26 pairs in the market, and those 26 pairs we only looked at 4. So we have 22 pairs I have not shown you anything on, which you may think the Edge Finder doesn't have anything on, but the Edge Finder has everything on it. So let's just look into those ones. with a quick view. So I'll jump straight into the top setup so you see everything that has to do with the forex market right now. Now, one thing that really jumped out to me is that there's one pair that seems to be standing real strong here. Is the British pound. The British pound seems like it's either gaining strength or it's neutral while the rest are losing strength. Because take a good look at this. Oh, sorry, I'm supposed to write it in all caps. It's cap sensitive. So you can see that the British pound is literally a standing currency. It's either neutral or it's bullish when it comes to the British pound. So this is one of the best currencies you can look into. Also, the US dollar is having a similar view, but still has some parts where you can see where you find it as the base currency. It is bullish. When you find it at the quote, it is most likely bearish. So you can see the British pound, the Australian dollar, it has a clear cut between all of them. And then another market you need to look out for is the New Zealand dollar, which looks like it is failing against almost all currencies, as you can see here, except the Swiss franc. The New Zealand dollar is like the weakest thing right now. So you have the British pound, US dollar strong, and the New Zealand weak. That is the common information you can all see here. Now, this is what I see looking into the week, and it's a personal view for this week. And thanks to the Hedge Finder, it was far more easier to view the market very fast, instantaneous, and all of that. However, next week, or rather this week, we're going to be having news releases again. And as news comes out, the numbers might change, the scaling might change, the record may change. But one thing is evident is that the Hedge Finder is going to automatically pull in those data and give you the newest reading every single time. As soon as you open the tool, it's updating, getting that information and telling you this is the current situation. Trade with accordance. As you can see, it's 4 hours and daily based. So it's something that can last you for like a week. A signal can last you for like a week or so. But then again, this is not trading signals. It's more like a directional signal. So they could tell you this is direction you should be looking more into. You see your technical setup in that direction, that may look far more credible than taking a setup in the opposite direction. So this is all I have for the week, and I'd say British pound is strong, the US dollar is strong, the New Zealand dollar is weak, and this is my journal for the week. But it's not a trading signal, and I would like to see what you two are looking into doing this week in the comment section below. So drop the comments and I will read every one of them.